give my next question to the head of operations, Lagos Commodities and Futures Exchange, Mrs. Nkechi Obi Chidi. But what infrastructure is in place to support pension fund participation in these gold-backed instruments?
Thank you very much, Blossom, and good morning once again to all our participants. A special good morning to our regulators, the Securities and Exchange Commission and the National Pension Commission, and to all my detailed facilitators that I'm sharing this panel with. We are very glad to be here this morning. I'd also like to send a special thanks to Mr. Patrick Ajayi because his session actually did quite a bit of justice to my question. So I'll just be writing a bit more on his presentation to highlight some of the infrastructure that has been put in place within not just the LCFE system, that's the Lagos Commodities and Futures Exchange system, but the Nigerian capital market. One of the clear areas that we're very detailed about has to do with regulation. Starting off with our engagements with the Securities and Exchange Commission, from even trying to get the exchange's license in itself and trying to get approvals for trading of gold contracts, trading of the SKRs, that's the safekeeping receipts, or as has been identified by the Investment and Securities Act, warehouse receipts. The Lagos Commodities and Futures Exchange has a very clear rules and guidelines that have been pre-approved by the Securities and Exchange Commission, which is also in line with the SEC rules and also the Investment and Securities Act 2025. Considering the fact that the Nigerian capital market in itself has spent a lot of time and infrastructure to maintain market integrity, develop market infrastructure with the support of technology and with the support of key licensed capital market operators. The Lagos Commodities and Futures Exchange is no different. We have leveraged on the existing successes of the Nigerian capital market. We have looked at what works within the capital market, and we understand the peculiarities of our own market. The commodities market, like I will say in every forum I go to, has slight differences when you're comparing it with the equities market. Now you're dealing with a tangible assets, and the tangible asset has to be stored somewhere. The tangible asset would need to be moved. The tangible asset would require some strict level of security around it, some deeper level of insurance. So all these details have been put in place. And when we consider our gold listing framework, when we consider our trading mechanism, so the level of the technical requirements, the technical support that goes into trading the contracts on the exchange, with alignment with the Central Securities Depository. Just like Mr. Patrick mentioned earlier, the LCFE, in partnership with the Central Securities Clearing System, CSCS, is currently operating the T+1 settlement cycle that went live on the 1st of June. So considering all these factors and highlighting some of the details around the custodial arrangements, around storage, highlighting that every single participant involved in the structuring and the listing of any security on our exchange, most importantly, the fact that you're dealing with precious metals like gold, and you're dealing with investment grade precious metals like 99.99%, 24 karat gold like Ian Smith is bringing to the market. They require that all capital market operators, all transaction party participants are all LCFE accredited and also SEC accredited and SEC licensed as well. But I'm sure that as the conversation goes on, more clarity will be brought to the front with regards to more of the market infrastructure and how we are supporting trading and investments where the pension funds and the pension industry can lock in and participate. Thank you, Blossom.